Nearly $300 million wiped out in a single day, while Ethereum surges to the edge of history. What just happened? Ethereum, the world's second largest cryptocurrency, has come within a hair's breadth of a new all-time high. But beneath the headlines of soaring prices, a staggering wave of liquidations has swept through the market. In just 24 hours, more than $290 million in Ethereum positions have been forcibly closed. The real shock, almost all of that total, came from traders betting against Ethereum. According to CoinGlass, short liquidations on ETH alone accounted for nearly half of every crypto liquidation worldwide in the last day. That means thousands of traders, convinced Ethereum would fall, lost their capital in the blink of an eye. Ethereum's explosive move upward did not just catch out retail traders. The sheer velocity of these liquidations hints at deep stress even among big institutions and sophisticated funds. When so much leverage unwinds this quickly, it is not just a blip. It is a sign of huge risk and even bigger opportunity rippling through the entire crypto ecosystem. Ignore these signals, and you risk losing your trading capital or missing a generational chance as Ethereum's dynamics shift before our eyes. The question now, who is winning, who is losing, and why does this matter so much? Let's dig into the timeline and the mechanics behind this historic Ethereum surge and uncover what triggered such record-breaking liquidations. Why is Ethereum exploding right now? And what do these massive liquidations really mean for the market? Ethereum has staged a dramatic comeback, surging past $4,670 for the first time since late 2021. The token now sits just a few percentage points below its all-time high of $4,878, set in November of 2021. In the past month alone, Ethereum has leaped more than 50%, rekindling the bullish energy that once defined crypto's wildest days. But behind the headlines, something even more explosive is happening, a wave of record-setting liquidations. In just the past 24 hours, close to $300 million of Ethereum positions have been wiped out. According to recent data, nearly half of all liquidations across the entire crypto market were Ethereum shorts, traders betting against ETH who got caught off guard as the price roared higher. To put it bluntly, almost $150 million in Ethereum shorts were liquidated in a single day. And it's not just the bears taking the hit. Over-leveraged longs, traders who borrowed heavily expecting further gains, have been getting swept up as well, as wild price swings trigger margin calls and forced sales. This is no minor skirmish. Open interest, the total value of outstanding Ethereum futures contracts, has ballooned to unprecedented levels, climbing above $36 billion and even approaching $60 billion on some platforms. That means more traders than ever are piling in with borrowed money, amplifying both the gains and the risks. When prices move fast, the domino effect of liquidations can intensify volatility and send shockwaves through the entire market. Why does this matter to you? Because liquidations are more than just numbers on a chart. They are real money lost, and they can dramatically impact market direction. They create sudden price cascades, spark panic buying or selling, and often mark the turning points where fortunes are made or destroyed. If you are trading or investing in crypto, understanding the mechanics of liquidations can mean the difference between riding the wave or getting crushed beneath it. All of this action is unfolding at a pivotal moment for Ethereum. Institutional money is pouring in. ETFs are attracting hundreds of millions in fresh inflows, and the derivatives market has never been this frothy. The landscape is shifting, and the stakes for every trader and investor have never been higher. So what's driving this avalanche of liquidations, and how did the market get so overexposed to risk in the first place? Let's break down the mechanics fueling this frenzy. Do you know who's pocketing the money every time Ethereum surges? Or could it be you getting wiped out next? Missing this could mean watching your gains vanish while someone else cashes in big. Let's peel back the curtain on the chaos. As Ethereum's price rocketed, soaring over 26% this week, Almost $300 million in liquidations swept through the market. Here's the twist. Most of those losses hammered traders who were betting against Ethereum. Short sellers, expecting prices to drop, got obliterated as ETH blasted toward its all-time high. But this isn't just a tale of unlucky retail traders. If you look closer, you'll spot strategic moves from financial giants. In a single day, spot Ethereum ETFs based in the United States attracted more than $523 million in new inflows, piling on top of over $1 billion since their debut. This is not your coworker buying a few tokens. These are institutions, funds, and corporate treasuries buying Ethereum with serious intent. These powerhouse players now control about 8% of all existing Ethereum. That's a massive share, and it's tilting the market's balance of power. As ETFs and treasuries gobble up supply, regular traders are left fighting for scraps, often at steeper prices and with much greater risk. Now, layer in the whales. This week, whales snapped up nearly $947 million worth of Ethereum, setting the stage for their next strategic play. When you see these enormous wallets buying up as retail short positions get liquidated, it's time to ask, who's actually coming out on top? Meanwhile, the derivatives market is reaching a fever pitch. Open interest on Ethereum futures just hit a fresh all-time high, almost doubling as volatility explodes. That means more leveraged bets, wilder price swings, and even heavier consequences. With so much money at stake, even a small price move can unleash a torrent of forced liquidations, punishing those who overreach and rewarding only the boldest and best prepared. But the real battle isn't just financial, it's psychological. As Ethereum races for new highs, the fear of missing out drags more traders in, while the sting of liquidations sparks panic and reckless revenge trades. The fallout? Extreme volatility, more clear-cut winners and losers, and a market environment that seems increasingly engineered for the biggest, fastest players. If you don't spot who's pulling the strings behind these liquidations, the whales, the ETFs, the institutional titans, you risk becoming exit liquidity for the sharpest money in crypto. The market isn't just moving up and down, it's being dominated, squeezed, and reshaped by forces most never notice. So how can you avoid getting caught on the wrong side of these moves? Let's break down what the smartest players are watching and how you can protect yourself. Is this just the beginning or the peak of Ethereum's most dangerous and lucrative season? Right now, Ethereum sits just inches from its all-time high. The rally has set off a chain reaction across the entire crypto market. In the past 24 hours alone, nearly $300 million in Ethereum positions have been liquidated, almost half of all crypto liquidations for the day. This explosion of volatility is no accident. Open interest in Ethereum derivatives just smashed through the $30 billion barrier for the first time ever, and some sources report it's now closer to $60 billion. That means more traders are betting, often with huge leverage, than ever before. When price swings hit, the risk of cascading liquidations grows, wiping out fortunes in moments. Institutions are not sitting on the sidelines. Inflows into Ethereum exchange-traded funds have hit record levels, with over $1 billion pouring in since launch, and more than $500 million in a single day last week. Whales and corporate treasuries now control an ever larger share of the available supply, driving a feedback loop of demand and making price movements even more dramatic. Prediction markets are now overwhelmingly bullish. On Myriad, more than 80% of users expect Ethereum to break its all-time high and reach $5,000 in the coming year. Yet that optimism brings its own dangers. As bullish sentiment and leverage increase, the market becomes more fragile and vulnerable to sudden shocks. If you misread what happens next, you could be wiped out in a historic liquidation event, or miss out on a once-in-a-generation opportunity to profit. The stakes have never been higher for both traders and long-term investors. This is a market where fortunes will be made, or lost, on the next major move. So what are the scenarios? If Ethereum pushes through its resistance to set new highs, we could see another tidal wave of short liquidations, driving prices even higher in a classic melt-up. But if sentiment turns or institutional flows slow, the mountain of open interest could collapse in a violent sell-off, catching latecomers off guard. And with so much of Ethereum's supply now locked in institutional vaults, even small shifts in demand could create outsized price moves, both up and down. The next chapter for Ethereum will be written in volatility. But whether this is the ultimate breakout or the top before a brutal correction, one thing is clear. Only those who understand the risk can hope to seize the reward. Let's talk about what you can actually do right now to avoid becoming the next casualty of Ethereum's wild moves. Here's how top traders and everyday investors are staying alive and even profiting amid the chaos. Let's get real. In the last 24 hours alone, Ethereum traders were hit with almost $300 million in liquidations. Most of that pain fell on those betting against the rally. Short positions wrecked as Ethereum surged past $4,500 for the first time since 2021. But it is not just about those traders who got wrecked. This level of volatility, nearly $300 million liquidated in just one day, means risk is everywhere. As open interest in Ethereum's futures market rockets to new all-time highs, exceeding $30 billion, markets are primed for more wild swings ahead. So, how do the pros survive these storms? First, manage leverage mercilessly. Remember, more than 100,000 traders lost over $5 billion in a global liquidation event this week alone. Top traders cut position sizes and use stop losses religiously when the market gets this heated. Second, never chase breakouts blindly. The rallies may look unstoppable, but dramatic squeezes can turn on a dime, especially now, with whale accumulation and record low exchange balances, creating tinder for even more violent moves. Diversification is your lifeline. Don't pile everything into one trade or asset. Volatility in Ethereum often ripples outward, dragging the whole crypto market with it. Protect your downside and keep some powder dry to take advantage of panic selling or sharp reversals. Finally, stay plugged in. Track on-chain data and funding rates in real time, because when open interest and leverage are at records, even a single tweet or regulatory headline can trigger cascading liquidations in minutes. Get this wrong, and you risk repeating the mistakes of thousands liquidated in minutes. Get it right, and you can thrive in uncertainty. The tools are there, but discipline and vigilance are your real edge. So, after this record-breaking week, where do you stand? Let's look at how these events could shape the next big move for Ethereum, and what clues the market is giving us about the future. Did you realize Ethereum's recent surge could decide whether you cash in or get wiped out? When the crypto tides shift this fast, missing a single move can cost you real money, or let you grab a seat at the winner's table. In just a few days, over $300 million in Ethereum positions vanished, including more than $250 million in shorts. This wasn't gambling. It was a real-world test of who understands the forces at play and who's just following headlines. Short sellers got crushed as Ethereum soared past $4,600, its highest since late 2021. Open interest in Ethereum derivatives climbed above $30 billion, and spot ETF inflows shot past $500 million in a day. Bulls who stayed disciplined reaped huge profits, while the unprepared or over-leveraged paid dearly. But luck isn't a strategy. The real winners decode risk, sift through data, and act on signals, not emotion. Trading blind is like playing chess with your eyes closed. Sooner or later, the cost catches up to you. This wave of liquidations is both a wake-up call and a rare chance. In crypto, fortunes can flip in hours, and trading on hype or fear leaves you exposed. Only those with preparation, discipline, and the guts to act when opportunity knocks are rewarded. With Ethereum pushing new highs and more volatility ahead, ask yourself, are you ready to adapt, learn, and move with purpose? because the game's still on, and the sharpest players are already thinking ahead. Now, let's break down what you can do to shift the odds in your favor before the next Ethereum move leaves you behind.